Hey, this is Kevin from Adventures in Us, and usually we talk about our journey to financial independence to retire early, and we also talk about some stock market strategies that we use. But today we're doing a collab with one of my favorite channels, Citizen of the Year. Fun fact, Citizen of the Year paid off all his student loans by the age of 22. But anyway, in this video, Citizen of the Year asked me to cover a couple main topics here. Topics like how to build your credit, how to start it, and is Credit Karma really that accurate at predicting your credit score? It's not. The reason why I know this is because I used to work for a credit union, and while I worked there, building credit and starting credit for somebody is something that I specialized in. Okay, let's start off with the three main agencies: TransUnion, Experian, and Equifax. Now, each of those agencies reports differently. So TransUnion, for example, is the only agency that offers Identity Lock. This is a service that protects against identity theft. So now when you go out and you're trying to pull credit for, let's say, getting a credit card or an auto loan maker or some kind of loan, these will use calculations from different agencies, thus the various and different numbers that you may get when your credit is pulled. So Credit Karma may be calculating it one way, but the banks or the auto loan that you're getting it from may be calculated a different way. It may use only TransUnion or two of the three. And because of this, you may go into the bank trying to get a loan thinking your credit score is 780, but in reality, when your credit gets pulled, don't be surprised if it's 700 or lower. It can vary wildly, though it can also be pretty accurate, so it's either a hit or miss with you. So careful on taking those numbers at face value. Maybe I'll make a part 2 on where to find the most accurate way to find out your credit score. Okay, so we got that out of the way. Let's start building credit for all you first timers out there. So later down the road, you're gonna need credit for maybe a loan on a house or a loan on a small auto loan. Now there's a lot of myths out there on how to build credit, which we can go over in a later video. But let's start out with the easiest one: find a cosigner. Chances are if you're starting out, you have zero credit. Now, you can either be the cosigner on somebody else's primary account or vice versa. This means that both of you guys are equally responsible for paying off that liability that's either on the card or on the loan itself. So at this point, most people would ask, does the cosigner have equal amount of responsibilities? Let's say that the primary defaulted on a loan. Does that mean the cosigner has to pick it up? Yes, you guys both have equal responsibilities. So if the payment is missed, both you guys and your credit scores are gonna be hurt. So the first way is gonna be that a cosigner with credit history already established comes and signs for you and says that we're both liable for this card. Now the other one is if you're gonna buy a car or something, and let's say that you're gonna pull out a loan for it. Well, the cosigner can also be on that loan signing for you, and you can also build credit that way without a credit card. Now, how credit is being established is because every single month you're making these payments. It gets reported to the bureau. The bureau sees how you're spending the money and starts building this relationship between you and them. Now they know how you spend your money and if you're pretty wise with it or not, thus building credibility with you or credit. What about phone bills and rent? Does that help credit? We'll talk about the myths of building credit in part 2 of this video. But let's say that we can't find a cosigner or nobody finds us responsible enough to be a cosigner on somebody else's credit report. What the heck are we gonna do now? Let's just straight up apply for an unsecured credit card. Yeah, let's just apply for that credit card and see what happens. This is usually what I recommend for other beginners coming in, because the worst they could say is no and your credit is already pulled, and we move on to number 3. But let's talk about unsecured credit card first. Okay, so you apply for this credit card and every payment that you've ever made and all the calculations goes into the banking system. They make their algorithms and their calculations and they spit back out a result. Is this person risky or are they not risky? So oftentimes I would get yelled at because they got declined. It's not my fault, it's the algorithm. Now, one of two things can actually happen here. I've seen it to where somebody has no credit, but they have a decent job and they've been paid weekly or bi-weekly, so they have income coming in, so it's less of a risk. So I've seen people get approved for an unsecured credit card right off the bat with no credit history. But that's only 10%. The 90% actually get declined because they have no credit history. Okay, so that plan didn't work. Now what do we do? Okay, so now we're gonna attempt for a secured credit card. This one is likely to be approved, and this is the option that I highly recommend if the other options don't work out. I recommend trying the other options first, but we're gonna go for a secured credit card. Okay, on a secured credit card, you can use it just like a regular credit card, but remember, secured means it's backed by something. So in this case, let's say that you create a secured credit card and your limit is $500 just to start out. Now, because it's a secured credit card, it has to be backed by something. So in order for you to obtain that $500, you have to give $500. Don't worry, that money is just being put on hold. It's being put on hold as collateral, just in case you can't make your payments on your credit card. Wait, collateral? Taking things away? Okay, let's explain collateral. Okay, let's say you're going down the road and you are spending money on your credit card and you're paying it back every month. But one month, it's stacked and it's maxed out to $500. And you lose your job and you can't pay that back. Maybe the next couple months, there's no payments. The bank can now take that $500 that you gave them to use it to pay off that credit card. So they're using that $500 that you gave them as collateral to take it and pay it off. You can think of it as insurance for the bank or the loaner. Now, let's say it's 7 to 12 months down the line and you've been paying off your credit card or your secured card and you're doing pretty well. Well, at that point, you've established credit with the bureau and you've had some history or payments going back and forth. So they trust you and you have credibility now. After that period of 7 to 12 months of building credit history, you're able to go back down to the bank and ask for an unsecured credit card. Now, what happens here at this point is now they're gonna release the $500 that was put on hold or the $500 that you gave them, and now that ends up back into your bank account, and now you have a regular credit card. And that, my friend, is how you build the circle of credit. Citizen of the Year, thanks for having me on the channel. If you guys are interested in the part 2 on how we maintain it, the myths of building credit or what will destroy your credit, and how to grow it fast, come on over to the channel. And while you're over there, remember to check out Citizen of the Year's video that he left on my channel. But as always guys, peace out. See you in the next video.